How connected is the global economy?
A big drop on Wall Street today.
The worldwide credit crunch.
Big losses. A virtual bloodbath and stock markets have plunged.
Next on Global Pulse.
$14 million people took a mortgage in the last 3 years. 7 million of them took teaser rates. They will lose their homes. Will somebody come on TV and tell the truth about how bad it is?
Kramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None!
In mid-August, a dramatic plunge on Wall Street triggered world panic. The BBC and ABC News went deeper, pointing out the buildup to this financial dive.
In April, this company, New Century Financial, a lender that made loans to high-risk borrowers, goes bankrupt. In June, now two major Wall Street hedge funds collapse because they've invested in high-risk mortgages. Then we hear about more conservative lenders having trouble. An American home mortgage goes out of business. And the capper, of course, this week, Countrywide Financial, the nation's largest mortgage lender, unable to borrow money. That puts the fear factor over the top and sends the market into a tailspin.
And now losses are apparent outside America. As we barely know which banks are affected, and as no one wants to buy parcels of debt anymore, the easy lending days have gone. Banks are being far more cautious. It's what they call a credit crunch.
The numbers weren't pretty. Korea's KBS News reports the losses European and U.S. markets endured.
One of the largest French banks, BNP, stopped repurchasing 3 U.S.-related funds yesterday. These funds were invested in U.S. subprime mortgages. Recent losses have made them too risky. The shock of BNP's actions decreased stock prices in France by 2.17%, Germany 2%, and in England by 1.92%. The price drop range in the United States was worse than in Europe, a 2.83% drop for the Dow Jones and 2.16% for NASDAQ. This is the worst stock market plunge for U.S. since last February.
But then, according to Fox News,
stocks slowed their slide after U.S. and foreign central banks poured several $100 billion into the financial system to reassure investors they won't be pinched by a credit squeeze.
Despite these central bank interventions, the Asian markets felt the decline, as Al Jazeera English reports.
Asian markets are bearing the brunt of plummeting U.S. stocks. Major markets in the region, including Japan and Hong Kong, have closed hundreds of points down. In Japan, officials were keen to play down the situation.
Every country is dealing with the situation in their own countries, but I expect they're always acting in concert with each other globally.
The fear now is that the huge cash injections, although designed to help the situation, may only panic investors even more.
The plunging markets have a direct effect on homeowners, as described by NBC News.
Petra Reyes refinanced her Southern California condo 2.5 years ago, courtesy of a cheap adjustable mortgage. Now she's barely making her payments, trying to sell before the bank forecloses.
I have to do something before I go into foreclosure.
And while Americans are losing their homes, Deutsche Welle reports that Europeans are worried about their own financial futures.
Many European banking customers fear that ultimately they'll be the ones to pay the price for the U.S. subprime mortgage crisis, when they're scrutinized even harder when asking for a loan.
This program is brought to you by Link TV for educational and non-commercial use only. Link TV is the only US network dedicated to global and national news, uncompromising documentaries and diverse cultural programs. Programs which connect you to the world.